Welcome to the deep dive. So if you're tuning in, you're probably one of the many people watching the markets, watching inflation, and just feeling that global uncertainty. And you're asking yourself a pretty big question about your retirement portfolio. Is there a way I can safeguard this with something tangible, something real?
And that question almost always leads you to gold IRAs.
It does.
But the thing is, while that appeal of physical gold or silver is huge, the market itself, it's a genuine labyrinth. You're just bombarded with ads, sales pitches, confusing fees. It's really hard to know who to trust.
That is exactly why we wanted to do this deep dive. Our mission today is to cut right through all of that noise, and we're going to do it by relying on some really exhaustive expert analysis. We're unpacking the findings from researcher Doug Young, who has, over 2 decades in finance?
Yeah, over 20 years just tracking these markets and retirement firms. His team has done all the heavy lifting for you. They've looked at over 80 companies going all the way back to 2011.
And they're not just looking at the slick marketing websites.
No, not at all. They built their rankings around hard data-verified consumer protection data. We're talking A+ ratings from the Better Business Bureau, AAA from the Business Consumer Alliance.
Yeah.
Stuff you can't fake. And a huge focus on transparency and, actual investor education, not just high-pressure sales calls.
So our goal here is to give you a shortcut, a way to get well-informed, fast. We're focusing on the absolute non-negotiables: compliance, clear fees, and good customer service. By the end of this, you should know exactly what to look for and who the experts are pointing to for 2026.
Okay, so let's start with the absolute basics, the mechanics. Because if you don't understand the structure of a gold IRA, you could accidentally risk the tax advantage status of your entire account.
That raises the stakes quite a bit. So when you open one of these, you're immediately dealing with 2 separate entities, right? There's the gold IRA company, and then there's the custodian.
Exactly. And they have very different jobs. The company is your guide. They're the ones you talk to. They set up the paperwork. They advise you on which coins or which bullion are actually IRS eligible. And that purity standard is very strict.
Okay, so they're the ones coordinating the logistics, the purchase, and getting it stored.
Right. They're the sales and support team, your main point of contact.
But, and this is the key thing, they don't actually touch your assets. That separation is critical. The custodian, they're the administrator.
Precisely. The custodian is an IRS-approved financial institution. It's usually a bank or a trust company, and they are legally on the hook for safekeeping your assets. They handle all the compliance, the record keeping, and they make sure the metals are in an approved, secure depository, the official gatekeeper.
So the custodian handles all the complex regulatory stuff. And here's something the sources really flag. The custodian does not sell you gold. They don't give investment advice.
No, they're strictly a fiduciary. And the biggest risk analysts see is when there's bad communication between your IRA company and that custodian. If they're not in sync, administrative errors can pop up and put your tax status in real jeopardy.
That's the real danger then, that administrative friction. So once you get those roles straight, you have to pick the type of IRA. The analysis points to 3 main versions.
Yeah, and each one is suited for a different expectation you might have about your taxes and retirement.
The most common is the traditional gold IRA. You put in pre-tax money, it all grows tax-deferred, and then you pay income tax when you take it out in retirement. This is for people who think they'll be in a lower tax bracket later on.
Right, and you contrast that with the Roth Gold IRA. This one is funded with after-tax money, so you've already paid taxes on it. But the big payoff is that your qualified withdrawals in retirement are completely tax-free.
That's a huge advantage for anyone expecting to be in a higher tax bracket later. Plus, the Roth has no required minimum distributions, which gives you a lot more control.
It does. And then, just briefly, there's this SEP Gold IRA. It works like a traditional IRA, tax-wise, but it's really designed for these self-employed or small business owners. It just lets you contribute a lot more.
So you've picked your type. Now you have to fund it. And the analysis seems to really favor a rollover from an existing account, like a 401k or another IRA.
Oh, it's by far the easiest route. But you have to be careful how you do it.
And this is the whole direct versus indirect rollover thing, right?
Exactly. The direct rollover is the safe, simple path everyone recommends. The money moves from one custodian directly to the new one. It never even touches your personal bank account, no IRS confusion.
Whereas the indirect rollover, that's where you get the check yourself.
Right. And you have exactly 60 days, a very strict deadline, to get that money into the new account. If you miss it, the IRS just treats it as a taxable withdrawal. You get hit with income tax and maybe even a 10% penalty. It's a risk you just don't need to take.
Okay, and one last absolutely non-negotiable rule on this: physical possession. With a gold IRA, You cannot touch the gold. It has to be stored in an IRS-approved, fully insured depository. The second you take possession of it, you lose the tax advantage.
That's it. We're talking about professional secure facilities, like the Delaware Depository or Brinks. The metals are held in your custodian's name, but for your benefit.
Okay, so we've got the rules of the game. We know who the players are. Now, how do we trust the rankings? This gets us to Doug Young's methodology. To get from over 80 companies down to just a handful, they used 5 really strict criteria. What was number 1?
Reputation and accreditation. This was the first hurdle. It's non-negotiable. It means verifying A+ ratings from the BBB, AAA from the BCA. They also dug really deep into complaint histories to look for any negative patterns. A clean track record over many years is a huge signal of trust.
That makes sense. In a market this crowded, reputation is everything. But what about the technical side of things?
That's the second pillar, regulatory compliance. This means checking a bunch of boxes. Are they properly licensed? Do they have strong partnerships with custodians? Do they stick to the IRS security standards for metals? And, critically, do they only use those approved insured depositories? Any corner cutting here was an immediate disqualification.
And now for everyone's favorite topic, fees. This was the third criterion, and it feels like the foggiest part of this whole industry.
It can be. So they focused on transparent fee structures. The analysis really prioritized companies that disclose all their costs right up front. You shouldn't have to go on a treasure hunt. The typical ranges we saw were setup fees from about $50 to $295, annual admin fees from $80 to $175, and then storage fees usually between $100 and $180.
I noticed in the research that they really favored flat rate fees. Why is that so important?
Well, flat rate fees gives you predictable costs. If you pay, say, $180 a year, that fee is the same whether your account has $50,000 or $500,000 in it.
Ah, so percentage-based fees would just keep going up as your assets grow.
Exactly. They just silently eat away at your returns over the long term. For long-term growth, fixed costs are a massive advantage.
That's a great insight. Okay, what about the human element? I mean, this is someone's life savings we're talking about.
That's criterion number 4. Customer support and education. The best firms focus on teaching the investor. They offer one-on-one consultations, detailed guides, and lifetime account support. The research actively filtered out companies that use those high-pressure sales tactics.
Yeah, I can just imagine hearing, this is the last gold coin at this price. That's got to be a huge red flag.
A giant one. The analysis wanted to see guidance over a quick sale, companies that educate you first and sell to you second.
And the last criterion, it ties back to security, right?
Secure storage, yes. So they didn't just look for full insurance. They looked for companies that offer segregated storage.
Meaning my gold bars are on a shelf separate from everyone else's.
Precisely. Your specific assets are physically separate, not just mixed in with everyone else's in a big vault. It makes tracking and withdrawals much cleaner down the road. And of course, those depositories have to have regular third-party audits.
So that rigorous methodology is what produced the top 5 list for 2026. The sources ranked them. Augusta Precious Metals at #1, then Goldco, American Hartford Gold, Advantage Gold, and Birch Gold Group at #5. Let's dive into the specifics because they each have some really interesting trade-offs.
Starting at the top with Augusta Precious Metals. They got the #1 spot, really, because of their flawless reputation. They have 0 complaints across all the major consumer platforms since they started. That is extremely rare.
That's a massive trust signal. And beyond that, their big selling point seems to be education. They have these private webinars with a Harvard-trained economist, and they offer lifetime account support.
And their transparency on fees is top-notch. It's very clear. A $50 one-time application fee, $125 a year for the custodian, and storage is typically $100 for segregated.
Okay, but let's talk about the elephant in the room. The $50,000 minimum investment. That's a huge barrier. If they're the best, why price out so much of the market?
And that's their critical trade-off. Their whole philosophy is geared toward high-net-worth clients who prioritize that white-glove service and education above everything else.
Yeah.
They're not for everyone. And there's some limitations, too. They don't offer platinum or palladium for their IRAs.
Got it. Okay, so moving to #2, we have Goldco, which is a huge contrast. The research calls them the best for minimum investment.
It is a massive contrast. Their unique selling point is that they technically have no minimum investment to start an IRA. They also get praise for their educational resources and a really streamlined rollover process, plus a very strong buyback program.
But the trade-off here is sort of the opposite of Augusta's transparency. Their fee structure is fixed, but you have to get on the phone with them to get the pricing details. They're not just listed on the website.
Right. And the analysis did note some customer feedback about um, pretty aggressive upselling during those calls. So while there's no technical minimum, you might feel some pressure to invest more to get certain fees waived.
So you need to be ready to stand your ground. Okay. At #3 is American Hartford Gold, called the best for flexible product offerings. They have a much more accessible minimum of $10,000.
Yes, and they really stand out because of their focus on liquidity. They have a guaranteed buyback program, and they offer some unique products like the Valcambi Combi Bar.
You mentioned that earlier. For someone who doesn't know, what's the benefit of something like that?
It's basically a gold bar that's scored, so you can easily break off smaller fractional pieces without having to melt it down. The benefit is liquidity. If you only need to sell, say, $5,000 worth of gold in retirement, you don't have to sell a whole giant bar.
That makes it a much more functional asset. What's the catch with American Hartford?
Similar to Goldco, no published pricing online. You have to call for a quote. And they're also really just focused on U.S. residents, which could be a limitation for some.
Okay, on to #4, Advantage Gold, noted as best for competitive annual fees.
Yeah, they hit a really nice sweet spot. A low minimum, usually around $5,000 to $10,000, and their ongoing annual fees are very competitive. Plus, they offer the full range of metals: gold, silver, platinum, and palladium.
But I see their one-time setup fee is a bit higher than the others, around $295.
That's their trade-off. A higher cost to get in, but lower cost to maintain it over the long haul. If you plan to hold the IRA for 20 or 30 years, those lower annual fees will more than make up for the higher setup cost.
And finally, at #5, we have Birch Gold Group, named best for selection of precious metals.
They offer the widest selection of IRA-eligible metals, which makes them great for anyone who really wants to diversify their physical holdings. They've got an accessible $10,000 minimum, and they scored really high marks for their personalized one-on-one support. Great for beginners.
And their fee structure looks pretty simple. About $50 to set up, and then around $180 to $200 a year for maintenance and storage combined.
So, when you pull it all together, the big differences between these top companies really boil down to two things. Your access, meaning the minimum investment, and the company's service philosophy.
And that's the main takeaway for you, the listener. While Augusta scored #1 overall because of their flawless record and educational focus, the best company really depends entirely on your individual situation and how much you have to invest. If you only have $10,000, Augusta is off the table. Birch or American Hartford Gold might actually be the best fit for you.
You really have to decide what matters most to you. Is it the absolute lowest ongoing cost, the most product flexibility, or is it that highest level of customer support and educational assurance?
We've spent a lot of time talking about how to get the gold into an IRA. But what happens decades from now when you actually need that money for retirement? You have to think about the end game right from the start. And that brings us to our final provocative thought.
You absolutely must research the gold IRA buyback process before you commit to anything. You need to understand how you get your money back out. This is where that whole relationship between the company, the custodian, and the depository really gets tested.
Just think about it. Selling a physical asset isn't like selling a stock. If you need cash, your gold IRA company has to give you a quote. Then, the custodian has to coordinate the physical transfer of your metal from that secure vault to the buyer, and only then do the proceeds get credited back to your IRA account.
That whole complicated dance is necessary to keep it all tax-advantaged. So here's the question to really mull over. If liquidity is that important for your retirement, does holding a physical asset with all that complexity in the selling process truly give you the flexibility and speed you might need? Or does the bureaucracy of compliance kind of undermine the easy access you thought you were getting?